Yes, welcome, good people. This is a ATD Level 2 Financial Accounting, August 2021 sitting. August 2021 sitting, Financial Accounting for ATD Level 2. And specifically, we are doing question 4. We are looking at question 4 of ATD 2. So the following trial balance was extracted from the books of Guru Limited on 31st December 2020. Land, buildings, plant and equipment at cost, investments, accumulated depreciation for building and plant, purchases and sales, inventory, bad debts, written off, distribution expenses, administrative expenses, investment income, ordinary share capital, share premium, retained earnings, general reserve 6%, debentures, accounts receivable, and accounts payable, allowance for doubtful debts, debenture interest, bank and cash, dividends paid. Additional information: that inventory as at 31st December 2020 was valued at for 20,500. Depreciation is to be charged buildings on cost, plant and machinery 10% reducing balance. The following were the balances as at 31st December 2020. Accrued distribution expenses 75,000. Prepaid administrative expenses 40,000. Allowance for doubtful debts is to be adjusted to 5% of the accounts receivable as at December 31st, 2020. Half-year debenture interest is outstanding. Investment income amount to 75,000 was received during the year ended 31st December 2020. The balance of the investment income was received in February 2021. Estimated income tax for the year is 9.5 The management provides for a transfer of 200,500 shillings to the general reserve. So we are supposed to come up with a statement of profit or loss for the year ended 31st December 2020 and the statement of financial position as at 31st December 2020. Good. This is a question on company accounts, Guru Limited on 31st December 2020. So we start right away with the solution. So this is Guru Limited income statement for the year ended 31st December 2020, like that. So close it like that. So as usual, the best way to go about this income statement like that. So let's have we'll have shillings, restrict the zeros, shillings, restrict the zeros, and shillings, restrict the zeros. So then come here, we start with the trading account. And what I normally say before going to the trading account and flowing with the whole thing, it's always good to go again through the additional information so that you master everything that is contained in the additional information. This is closing inventory, this is depreciation, this is accrued distribution expense, and then prepaid admin. Of course, this will have an effect on the P&L. Allowance for doubtful debts to be adjusted 5%. We don't know whether it's a decrease or an increase. We'll come to that, but it's P&L. Half-year debenture interest is outstanding. That is P&L. And then investment income amounting 75,000 was received during the year. The balance of the investment income was received in February 2021. So most likely that's an accrued income, an income owing. Then the estimated income tax for the year is 9.5 That is appropriation. And then the management provides for a transfer of 200,000 to the general reserve. That's also appropriation. So once you know what is contained in the additional information, it becomes very easy for you to run along the question. So we know there's depreciation, we know there is an accrual, we know there is a prepayment, we know there are incomes, we know there is something debentures. That is good for us. So let's run here and start. So for the trading account, we know there's nothing other than the closing stock, so we are good to go. Trading account, and trading account is basically sales less cost of sales. I'm trying to see if there's sales returns or purchase returns or carriage inwards, those workings for the sales and cost of sales respectively, and seems like they are not there. Carriage inwards, return outwards, return inwards. Very keen on the trading account. So they are not there. So we'll go straight sales, 12,920, 12,920 sales. So we start sales, 12,920. Since it doesn't have any workings, we just put it there. Then cost of sales, we have opening stock. In most cases, opening stock will not have any workings, so we just go to the trial balance, get the opening stock. Get the opening stock. Inventory 1st January 390. So pick it as it is. Inventory 390. Then we add what? Purchases. We add purchases. So purchases, since there is no carriage inwards, there is no return outwards, we'll pick purchases as it is. 5,500. 5,500. Then go to closing stock. And closing stock is not found in the trial balance, so we'll just come here, closing stock for 2,500. For 20,500, trying to check if there's anything, nothing. So for 20,500. Now remember, this doesn't, we've not restricted the zeros here, so this is for 20.5. It's very important that you check your figures. There is normally a way the figures will relate. So for 20.5, because we had not restricted the zeros, so let's get this 390 plus 5,500 minus 420.5. That gives us 5469. 5469.5. So 5469.5 less from that minus 12,920. This gives us 7450.5. 7450.5. This becomes our gross profit. Then of course now we add the incomes and gains, and from the look of things our question had incomes and gains, because we have investment here and the interest rate is 10% per annum. So it means we have interest from our investment. 10% of this is 150. 10% of this is 150. And then let's check again if there's anything else. Let's check again if there's anything else. Additional information. There is allowance for doubtful debts is to be adjusted 5%. Now, this is not an income per se, but you have to check if it's a decrease or an increase. If it's an increase, it will feature the expense and losses side. But if it's a decrease, it will come under income and gain. So 5% of accounts receivable. Let's just see what that has for us. 5% of accounts receivable. This is 5 over 100 times 2,000. That gives us 100. So it means our new allowance for bad and doubtful debts stands at 100. What did we have? Allowance for doubtful debts, we had 300. So this is a decrease from 300 to 100. A decrease from 300 to 100. So it means it has decreased by how much? 200. It is this decrease that we are interested in. From 300 to 100. So it has decreased by 200. A decrease is like a gain. We had anticipated that we're not going to get that money. So I'll simply come here and say decrease in provision. Decrease in provision for bad and doubtful debts. And we've seen it's 200. It was 300, it has decreased to 100, so it means we have 200 as our decrease. And then there must be something on investment. That's why I put it in the mid column. Investment income amounting to 75,000 was received during the year ended 31st December 2020. The balance of the investment income was received in February. So it means we only received 75,000, but how much are we supposed to receive? 150, 10% of 1,500, 10% per annum. So we are supposed to receive 1,500. We received only 75,000. But does it really matter? No. Our interest is on the income that was generated that year. And the income that was generated that year was Kenya shillings. The income that was generated that year was Kenya shillings 150. The income that was generated that year was Kenya shilling 150. So that is what we'll have here. Investment income is 10% of the what is expected, which is 150. It's actually 150 because yes, they only received 75, but what they generated is 150. We normally talk of the income and not received as per the accrual concept. So this gives us a total, unless if we have any other thing. There's no any other income. So this will give us 350. So we add that here, we have 7,800.5. Then we less expenses and losses. Expenses and losses. So let's go back and pick all the expenses and losses. We start from here, land, buildings, investment, accumulated depreciation. Yeah. So we already have accumulated depreciation, but we'll come to that later. Purchases and sales, inventory, bad debts written off 235. Yeah, there was no working on bad debts written off. I don't remember any. So bad debts written off is 235, like that. And then there's nothing on bad debts written off, so we pick the next one. Distribution expenses 1160. Was there something on distribution expenses? Yes, accrual. So distribution expenses is 1160. Distribution expenses $1160, but since we have an accrued distribution expense of 75, remember it has been written 75,000, but it's actually 75 because the zeros are supposed to be restricted. That will give us 1235, like that. The 75 is here, the accrued distribution. So these are in line with the accrual concept because it is accrued but it belongs to this year. So we are going to add it. Then we go to the next item. Administrative expenses 2410. Do we have administrative expenses? Administrative expenses 2410. Yeah. Prepaid is 40. So administrative expenses, and we have prepaid here 40. So administrative expenses 2410. Then prepaid admin expenses, this is 40. We are deducting why? Because part of this 2,410 has been prepaid. It's not for this year, it's for the following year. We paid in advance, so we have to deduct it to get the exact amount that was actually incurred this year. So it is 2410 minus 40, you get 2370. So 2370, like that. Then we go to the next item. Investment income, I think that one we've already captured as 150. What was received was 75. You can see it's on the credit side. This is what was received, but ideally we were supposed to receive 150, and that's what we have recorded. Then I'm just picking the expenses. Allowance for doubtful debts, we are now done with that one. We will not capture it under expenses and losses because we have already captured it. It's actually a reduction. So debenture interest, you can see it's 120. Debenture interest 120. But wait a minute, let's check debenture interest. How much was supposed to be paid? Where are these debentures? What we paid was 120, but how much was supposed to be paid? It's here, 6% debentures. 6% of 4,000. 6% means the interest rate was 6% per annum. So 6% of 4,000 is 240.06 times 4,000. That is 240. So it doesn't matter how much you paid. What was incurred for that year is 240. That's what we are going to pick. So debenture interest is an expense. Remember, we are not dealing with debenture. We are only interested in debenture interest, which is an expense. So 240. 40. What was paid was 120, so it means 120 is outstanding and it will feature in the balance sheet. Dividends paid, yeah. Now dividends have been paid at 1050, so we'll also capture that. Dividends paid. Dividends paid. But we need to check how much was actually supposed to be paid, unless if we have not been told. Dividends, where are dividends? Where are ordinary shares? Check the ordinary shares. Check the ordinary shares. Ordinary share capital 6,000. Have they said anything on ordinary share? In the additional information, there is nothing. So we'll work with what has been paid. Dividends paid 1050. Dividends paid 1050. We'll work with what has been paid. So is there anything? I think we are done with the first part. Second part, inventory, no. Depreciation. Now we have depreciation. And depreciation, buildings 5% per annum on cost. Then plant and machinery 10% per annum on reducing balance method. So buildings 5% per annum on cost. That one just take 5% of 8,000. 5% of 8,000. I think that is 400. 5% of 8,000 is 400. Just pick it as it is. Depreciation. Buildings. This will give you 400. And then depreciation for the other thing was plant and equipment 10% per annum on reducing balance. So 10% per annum. Now this time down, we are not going to take 10% of 92 because it's on a reducing balance method. So we're going to take 10% of the written down value. How do we get the written down value? Written down value, we take the cost less the accumulated depreciation. This is the accumulated depreciation minus 2150. What do we get? 9200 minus 2150. We have 7050. Then take 10% of 750, which is 705. Like that. So if they say depreciation 5% on cost, just take the cost. But if they say reducing balance, take the cost less the accumulated depreciation, then work out the percentage. So 705, and that is plant and equipment. 705. Plant and equipment 705. Plant and equipment 705. This gives us 1105, like that. So the next thing is plant and equipment done. The following are the balances. I think we've captured this. Allowance, you are done. Half year debenture interest is outstanding. You have captured debenture interest. Investment income, we've captured that. Estimated income tax for the year 925. This is appropriation, and the other one also appropriation. So we are done. Let's get this total. Let's get the total. So this will be 235 plus 1235 plus 2370 plus 240 plus 1050 plus 1105. That gives us 6235. That gives us 6235. 6235. So then 7800.5 minus 6235. This one gives us 1565. 1565. 1565.5 as our net profit. 1565.5 as our net profit. So we proceed. So let's just counter check. So I think we've captured everything, right? Expense and losses, bad debts, bench interest, dividend. Sorry, I think the dividends paid. Sorry, since we'll be having the appropriation account, there's no need to have the dividends paid here. I think we had brought it, we had included it a little bit early. This one will surface at, I think it will come in at the appropriation stage. So let's just do away with it. Okay, let's get the new total. Now that we have that, 235 plus 1235 plus 2370 plus 240 plus 1105. That gives us 5185. So 5185. 5185, and we less because it's an expense, so minus 7800.5. This gives us 2615.5. This should be our net profit. So then we go to the appropriation account, and the appropriation account now will have I think it is clear what you're going to have here. We'll have the dividends paid, what we've just removed. So dividends paid 1050, but we always start before the dividends paid. It's always good to start with the taxes. So estimated, because taxes are a percentage of the profit. So let's start with the income tax for the year 925,000. So income tax 925,000. Income tax 925,000. So we'll have 925. Then we have the dividends paid. Dividends paid was 1050. And then we have the transfer to general reserve. Transfer to general reserve. Transfer to general reserve. What do we have? I think it was part somewhere here. Transfer. The management provides for transfer of 200,500 to general reserve. So that will be 200.5. 200.5. I hope that is very clear. The 1050 dividends paid is here. 1050 dividends paid here. Then the estimated income tax 925. Get rid of the zeros, and general reserve is 200.5. So that's what we'll have here. So this will give us 2615.5 minus 925 minus 1050 minus 200.5. That gives us 440, and this will be the equivalent of retained earnings. Retained earnings for this is a period. Which period are we talking about here? The period is 31st Dec 2020. So retained earnings 31st Dec 2020. 440. So that is it. We are done with the first part. We'll go to the second part, and we'll also say Guru Limited, second part. Let's just start from here. So the second part is Guru Limited. Statement of financial position. Statement of financial position. Financial position as at 31st Dec 2020, like that. So we underline it, we underline this, and as usual we have the three columns like that. So we'll start with the non-current assets. Non-current assets, and I think they were very clear from the question. We have land, buildings, plant and equipment, and land is 15. Land, buildings, and in fact also investment. So we'll have land, buildings, plant and equipment, and investment. All these are. So land was 1,500. I think investment was also 1,500. Let's get the figures for buildings and plant and machinery. So you can see land 1,500, investment is here 1,500. So buildings at cost 8,000, plant and equipment at cost 9,200. So 8,000 and 9,200. Let's pick them like that. 8,000 and 9,200. So then we go to the depreciations. We've not had any depreciation on land, so it's 15. We've not had anything on investment, so it's still 15. Then for buildings, we have the accumulated. We'll take the accumulated depreciation for buildings. You can see it's here, 3480 plus the depreciation for this year. The depreciation for this year, I think it was 400. So let's just confirm depreciation for the buildings for this year. They are here, the figures. We had already worked them out. Depreciation buildings 400, plant and equipment 705. So for buildings, depreciation is 400. So 3480 plus 400, that gives you 3880. So we'll come here and say 3880. 3880. So 8000 minus 3880, that gives you 4120. Then for the plant and equipment, we have 705, which was the depreciation for this year, plus 2150. 2150 plus 705. That gives you 2855. This 2150 plus 705 depreciation for this year. So it gives you 2855. So we'll come here and say the depreciation for this is 2855. Total depreciation. And these are less. So 2855 minus 92. That gives you 6345. 6345. So if you add all this, you will get 6345 plus 3000 plus 4120. That gives you 13465. 13465. So that is the value of the non-current assets. Then we go to current assets. For current assets, we start with land, buildings, plant, investment, accumulated depreciation, purchase, inventory, bad debts, distribution expense, administrative expenses. I remember there was a prepaid expense, that's a current asset, we'll come to it. Investment income, there was also an accrued investment income. It's also a current asset. Ordinary share capital, retained earnings, general reserve, accounts receivable, 2000. It's a current asset. Then we continue bank and cash at 580. It's a current asset. So let's start with the inventory. Quite straightforward. Inventory for 20.5. So inventory for 20.5. Inventory 420.5. Then we go to accounts receivable. Accounts receivable. Our accounts receivable, remember, it had the allowance was reduced to 100. So we'll simply take the figure of accounts receivable less 100 allowance for bad and doubtful debts. The 100 is 5% of 2000. So it will be 2000 less 100. This one. 2000 less the 100. So that gives us, this will be 2000 less allowance bad and doubtful debts, which is 100. So this will give us 1900, like that. Then we go to bank. So we had a bank balance here. Bank is here, bank and cash 580. Bank and cash 580. So bank and cash 580. Then we now go to think what is remaining at the accrued and the prepaid. Prepaid administrative expense 40. We had paid in advance, so it's our money. We have not utilized it. So prepaid administrative expenses. How much? 40. Next we have accrued investment. Accrued investment income. The 75 that we were supposed to receive. The total that we received was 75. 75 is still owing, so it's still part of our money. The 75,000 from the investment assets. So with that, I think we are done with the current assets. Those are the ones that we managed to identify. So for 20.5 plus 1900 plus 580 plus 40 plus 75. This gives us 3015.5. 3015.5, like that. Then we go to current liabilities. Under the current liability, we have the obvious accounts payable. Accounts payable. So let's go check the figure. Accounts payable, it was just somewhere here. Accounts payable is here 735. So let's pick that one. That's very obvious. Accounts payable 735. So we pick it. I hope it's not the only one. It cannot be the only one because we have some outstanding. And let's check now. Land, buildings, plant, investment, accumulated, those ones all are not. Inventory, bad debts written off, distribution expenses, we have an outstanding here, we'll pick it. Administrative, no. Investment income, no. Ordinary, retained earnings, general. 6% debentures, no. Now 6% debentures, yes, there was an outstanding. Remember, this was 240, but we only paid 120, so there was an outstanding of 120. The figure is actually here. Debenture interest, what we paid is 120, but what we were supposed to pay was 240. 6% of 4,000 is actually 240, but we only paid 120, so 120 is still outstanding. So that's a liability. Accounts payable, we've captured it. Allowance for doubtful debts, we are done with that. Yep, so we don't have much here. We don't have much. So we'll start with this one. Accrued distribution expenses, 75. Accrued distribution expenses. We are supposed to pay, but we have not paid. Accrued distribution expenses. This is 75. And then we said we have accrued debenture interest. It was 120. Then let's check if we have anything else. Accrued debenture interest. Let's check our additional information. We are done with all this. We are done with that. Allowance for doubtful debts, we are done with that. We have already provided in the current assets. We've deducted the 5% from the accounts receivable. Half-year debenture interest is outstanding. We've captured that, 120. Investment income, that's an asset. Estimated income tax for the year is 925. Now this one, estimated, we have not paid. So it becomes a liability. We have to create a provision for it. So provision for income tax, 925. Provision for income tax. We have only estimated. So provision for income tax, 925, like that. So let's get the total. This is 735 plus 75 plus 120 plus 925. That gives us 1855. These are liabilities, so we are going to deduct from the non-current assets and the current assets. So this is 13,465 plus 3015.5 plus minus 1855. That gives us 14,625.5. 14,625.5, like that. So this becomes our net capital employed. We might want to counter check just to be sure, but since we are not far from winding up the question, we will counter check it when it if it balances or not. So you can simply say financed by, and then we start the other end, the other remaining bit. All these are part of the financials, all these up to here, I think. So ordinary share capital 6,000, share premium 550. Let's capture them. Ordinary share capital 6,000. Ordinary share capital. So we have 6,000. Since you have, you can have this here, 6,000. Then share premium. Share premium. I think it was 550, but we'll confirm that figure again. Let's confirm it again. Share premium 550. Retained earnings 1030. So retained earnings. Now this retained earnings, we have two retained earnings. We have retained earnings 2019 1030, and then retained earnings 2020, the one we had for this year, 440, I think. Let me just get the figure right. Yeah, retained earnings 440. So we'll have 440 there. Then we move on. Let's pick it from the question again. General reserve 2405. General reserve 2405. General reserve. General reserve 2405. Remember, it has some workings. So general reserve, then additional transfer to the general reserve. I think it was 200.5. 200, let's just confirm the figure. It was 200.5 that was transferred this year. The estimated income for the management provides for a transfer of 200.5, because the zeros are restricted. So we've confirmed this 200.5, and these figures were misbehaving. They were moving with me. So I hope they'll not move again. Yeah. So 2400. Is it 2400 or 2455? Now this is the worst part of having a bad handwriting. General reserve is 2405. Make sure you have a good handwriting, because you can write figures here that may not go well when you are working the totals. So 2405 plus 200.5, that gives you 265.5. Good. Then we move on. 6% debenture 4,000. 6% debenture 4,000. So I think up to there we are done. 6% debenture, this is a long-term liability. So let's just get the total here. This is 6,000 plus 550 plus 1030 plus 440 plus 265 to 65.5. That gives us 10,625.5. 10,625.5, and then we say long-term liability. Long-term liability, we have 6% debenture at 4,000. So there's no need to write here, because the total here was this, so 4,000. So this gives us 14,625.5, and that is the same figure that we have up there. So it means we are good to go. So this is our net capital employed. We are good to go. That makes it the end of that question. We are good. It has balance. So that is what was expected of you. Thank you. That is what was expected of you. This question is a fair question. It is not bad. It's a fair question, and it should take you not so much of which not take so much of your time. It should not take so much of your time. We have only managed to use how many minutes? Let me check. We've used 38 minutes. Can imagine 38 minutes, and we are just going through it slowly. So if it's an exam session and you are the one doing it alone, you need to spend less than 30 minutes, so that you save some time for other questions that might be complex. Normally the questions are mixed. We have complex ones and the ones that are not complex. So this one, we may not group it under the complex questions, so that you save time on this one and use this time on other questions that might be complex. Share, subscribe, so that you don't miss all our forthcoming revision questions. Thank you so much. Success in your exams.